economic sanctions and sanctions as a tool of foreign policy, that is getting much more sophisticated, much more complex, and potentially much more disruptive than it ever has in the past.
This is Steve Orlins, president of the National Committee on U.S. China Relations, and I'm thrilled to host today one of our public intellectuals. In fact, a public intellectual of our 7th cohort, if I'm not mistaken, Nick Borst, who is unusual for a public intellectual in that he is not teaching currently. He is the vice president of Seafarer, which is an emerging markets firm. In fact, I guess that's why the name is Seafarer, kind of going out there and looking at the emerging markets. But we've asked him today to come in because on February 21st, the White House put out what they called a presidential action, America First investment policy. And I looked at it and I kind of said, I don't quite understand what this is. So Nick agreed to come and speak with us this afternoon. So we're thrilled to have you. Thank you. Should I ask you, by the way, before we start, about your upcoming book, The Bird and the Cage? Just tell us what the title means.
Yeah, it should be coming out this spring. And it's really a look at how the Communist Party in China has approached the private sector over the years, and its attempts to sort of guide and control the private sector, using it to fuel growth, but also trying to guide it towards policy objectives.
Yeah, certainly a hot topic given Xi Jinping's meeting with all the tech leaders last week. So that's great that you're doing that. Tell us about the memo. First of all, what did it really change?
Yeah, there's a lot in the memo, and I think it always has to be the case with policies that we hear from the Trump administration. I think the old phrase is take them seriously, but not literally. So there's a lot in here. I would imagine that some of it will ultimately be implemented, but my base case is not all of it will be implemented. But some of the key things that really stood out to me was this attempt to basically tighten down all of the restrictions that have already been put in place on U.S. China investments, whether that's FDI, whether that's through venture capital or the capital markets. Really across the board review of a lot of the policies that actually started under the first Trump administration, renewing them, strengthening them, potentially making them a lot more strict and disruptive.
Such as, well, is that why it was, well, then I'll ask you the such as, is that why it came out as a memo to the cabinet rather than as an executive order? Because he signed, what, 100 executive orders in his first month?
Yeah, I'll have to leave it to the lawyers about why it was chosen to be a memorandum versus an executive order. My understanding is that presidential memorandum is a little bit less strict in terms of having to cite specific statutory authorities and listing in the Federal Register. But there is a lot in here that could potentially change, and sort of sweeping in its approach of reviewing all of these policies that have been put in place.
Is there anything that has, so it gives this framework, but very little specific about what is going to change?
Yeah, although there are a few new things in there that at least I haven't seen. One is the U.S. China tax treaty, and potentially having that come under review. And we can talk about that a little bit later, of how that might disrupt investments. But also, I think it was pretty notable for now there's no longer any distinction between the mainland and Hong Kong, at least in terms of these policies. And so from that perspective, they are applying the same sets of restrictions to Hong Kong that China has been subject to for a long time.
Both for companies and for individuals.
Mm-hmm.
If you're a Hong Kong ID card holder and you're in the United States, you're subject to the same restrictions as a mainland passport holder.
Yeah, if these policies are implemented as they're described in the memorandum, there'll be no distinction.
Mm-hmm. What else specifically kind of came to mind from your read?
Well, there's this real attempt to balance between keeping U.S. capital markets open and attracting investment, which I think is important to the Trump administration's overall, push to grow the economy, to have the U.S. be sort of a technological leader, a premier investment destination, but also putting in these restrictions on China, and then some fairly vague. We still need to really understand how it will be put into place. Language about basically the degree of distance you are from China and Chinese civil military fusion efforts, the greater degree of openness you will have to U.S. capital markets, which could be a very big sea change for how the U.S. has handled this previously, where we've been traditionally very open to foreign investment, tons of foreign investors in our stock and bond markets. If now we're applying a lens of geopolitics over all of that, that could be fairly disruptive, in my opinion.
And what about outbound investment?
Yeah, so they are trying to potentially tighten the screws in a couple different ways. One would be expanding upon the outbound investment screening regime that was put in place by the Biden administration. So far, that hasn't been super disruptive because a lot of the restrictions are actually just notification. You have to notify the U.S. government if you're investing in a particular sector. But you could see that be significantly tightened up and be very disruptive for foreign direct investment, venture capital investment. And then there's also this push to potentially go after more passive minority investor types of investments into China's capital markets. So there's talk about increasing the numbers of companies on the banned list for U.S. investors, putting more restrictions on pension funds in terms of their fiduciary responsibility in terms of investing in China, and actually revisiting some policies that first came into place under the Trump administration, like the Holding Foreign Companies Accountable Act, which was really a huge push to increase transparency around Chinese companies listed in the U.S.
What does it mean for then investors who simply are investing in Chinese stocks?
It's never been more complicated to just simply invest in Chinese stocks. So, we can look at the flows of capital over the past few years, and according to a couple of different estimates, sort of the high water mark of U.S. investments into China really peaked around 2020. And since then, have probably fallen about half. And part of that has been the slowdown in the Chinese economy, but also part of that has been this increasingly tight web of restrictions that U.S. investors have to grapple with. Is a company going to be delisted for potential audit compliance issues, or are they going to be put on the Chinese military companies list, and then I'll have to sell it to comply with OFAC sanctions? Am I going to be told as a pension manager I can't invest in Chinese companies for other reasons? So it's really a very complex atmosphere for U.S. investors to navigate. And in my opinion, it's no surprise that overall investment in China has declined.
Yeah. Does it carry down to citizenship? So if you're in a fund and the fund invests in China, they will attribute your U.S. ownership. That would be a violation of you as an individual if the fund were, Cayman Islands or whatever.
Yeah, I think a lot of this would have to depend on the individual details of the fund and the investor. But in general, I think U.S. fund managers try to steer widely clear of any potential, tripping up OFAC sanctions. Yeah. And, one of the big reactions we saw is there's so much investment now that follows what's going on in the indexes, MSCI, Bloomberg, really trillions of dollars that follow investment indices. And there's been a big pressure point on index providers to either cut Chinese companies out of their indices completely, or at least reduce the exposure. And so through that, almost automatically, if you're investing passively, your China exposure will decrease.
Since there's no evidence the Europeans, the Japanese, or the Koreans are going to follow this route, are we going to see the creation of a market that basically for U.S. investors and then for the rest of the world? So ETFs that just would be sold to non-Americans.
Yeah, that is definitely a possibility. And I would say probably the further we go down this route, the more you might see a bifurcation of global capital markets. But what I've seen right now is more or less people are following kind of U.S. guidance on this, essentially because no one wants to be caught on the wrong side of U.S. sanctions. So the U.S., by dint of our role as sort of the world's largest capital markets, the dollar being such an international currency, most of global investment is still marching in step with what's going on with U.S. restrictions. But there will be a point where that will be tested, where people might say, well, wow, these U.S. restrictions are so onerous, so restrictive on what I would like to be doing that maybe it's time to make a clean break. So that's always a balance I think U.S. policymakers have to keep in mind of, yes, we have this very privileged role in the international economy and financial system that gives us a lot of leverage, but there's also always the danger of overusing that leverage.
Yeah. I mean, if the Chinese market, and people have become over the last few months slightly more bullish on the Chinese market, Chinese equity public market. At some point, if you're missing that, so if you're not participating in that, and others are participating in that, and the market does realize its potential, you're going to underperform an index that includes those stocks. So it would make it difficult to justify your management to your investors.
Yeah, and the other factor is China is not capital scarce right now. China has, one of the biggest problems facing the Chinese economy right now is the savings rate is too high. Yeah. So the idea that turning off U.S. investment in China is enough to derail the Chinese economy, I don't put much stock in that. Obviously, things are incrementally harder for Chinese companies if they can't gain access to U.S. capital, but that's not really what's holding the Chinese economy back right now. So I think there's, in some senses, limited effectiveness of, even if you completely shut off U.S. capital to China, the impact is not enough to derail China's economy.
How does this memorandum fit in with the president's statements during the campaign that he was going to encourage Chinese automakers to create jobs in the United States by investing?
Yeah, and that is one of the real puzzles right now of which China policy in the Trump administration is ultimately going to win out. There's a lot of very hawkish advisors who would like to sort of turn the screws on China in every way they can. I think a lot of that is reflected in this America First Investment memorandum. But then there's also people in the Trump administration, most notably President Trump himself, who talk about wanting to do another deal with China and wanting to encourage investment into the U.S. And so right now, those two policy paths are in conflict with each other. I think it's quite hard to imagine a Chinese company wanting to invest billions of dollars in the U.S. amid the uncertainty about, will that investment be permitted? Will I be forced to, sell it and retreat back to my own shores? That type of uncertainty, I think, is really toxic for the bilateral investment relationship. And so we're in this moment where both camps are basically pushing a different vision of how the U.S.-China investment relationship might unfold. And I think we'll have to see which one wins out. The other thing I would say we shouldn't discount is that some of this may be negotiation leverage and posturing.
Yeah, that was going to be one of my questions. Is this a tactic so that he can use this and kind of say, well, we won't do X, Y, and Z. In China, you have to do A, B, and C.
Yeah, it's quite possible that some of this is designed to give the U.S. more leverage over China in a negotiation. As I mentioned earlier, if the entire gamut of policies outlined in the memorandum were implemented, it would be hugely disruptive, not only to China, but also potentially to the U.S. And so if that's the case, then we have to assume that some of this may be sort of threats in order to gain leverage. The idea, as you mentioned, that let's sign a new trade deal or help us on XYZ policy. Otherwise, we'll start to put some of these policies in place. And so I think some of that has to be interpreted as a negotiation tactic, but also I would also expect that some of this will be implemented. There's enough sort of bipartisan consensus across the U.S. political spectrum of restricting investment flows and especially tightening loopholes where they may exist.
Are the folks who are strongly advocating for increased tariffs? So now we've seen 10% now. On May 4th, we're going to see 20%. And some of the justification is bring manufacturing back to the United States. One of the primary countries whose manufacturers may relocate to the United States is China. If we put these investment restrictions on, aren't we telling these companies, well, relocate to Malaysia, Indonesia, Sri Lanka, wherever, Mexico, Canada? So isn't there kind of a maudo, and isn't there a contradiction in this whole thing?
Yeah, I mean, that would be one of the best ways to solve the U.S. China trade imbalances would be actually to encourage Chinese investment in the U.S. Obviously, there'll be some sectors where we don't want Chinese investment, but there will be many others that I think it could actually be mutually beneficial. The problem is where Chinese companies have tried to do that, and I'll cite some of the battery makers who've tried to set up plants in the U.S. have really faced a lot of political opposition, sometimes actually formal restrictions, and so that's a hard leap for any company to take. Of I want to invest in the U.S. Maybe there's incentives in terms of tariffs to invest in the U.S., but I don't know how to deal with these, political complications that might ultimately scuttle my deal.
Are they coming from localities or the federal government?
Both. I think there is a.
You're referring to CATL or to battery storage companies?
The battery makers, the EV battery makers who have tried to set up plants in the U.S. Yeah. And when I talk to Chinese companies from my day job, a lot of them are looking at the U.S. market as essentially closed to them, and instead they are looking at Vietnam, India, Mexico as their next step is to set up factories in those locations, potentially as a way to circumvent some of the restrictions in terms of tariffs and other things. So there's a real push to diversify away from China, but a lot of that won't ultimately end up in the U.S. in the current environment.
Right. The memorandum talks about verifiable distance and independence from the predatory investment and technology acquisition practices of the PRC and other foreign adversaries or threat actors. What does that mean?
Yeah, I think we're puzzling through that. That's part of the uncertainty about this memorandum that I mentioned of we are essentially putting a geopolitical framework on inbound investment into the U.S. And there's this balance of wanting to keep the U.S. open for business, to welcome investment. But now we're going to have sort of a additional layer of restrictions that is really dependent on how close you may be to China, and especially Chinese civil military fusion. I have no idea how that will work in practice, how that will be determined. We have seen with some of the investment restrictions, notably the China military companies restrictions that came into place in 2020, a process where companies are named, they're put on a list. Actually, some of those companies have taken the U.S. government to court and got their name off the list. But it seems like there has to be some process in place if the U.S. government is serious about basically opening investment wider to friendly companies and countries and closing it to what they call foreign adversaries. There has to be a process in place to do that. And I really hope it's a transparent and open one, because that's been a source of frustration is up to now how non-transparent some of these declarations have been.
Yeah. What was the stock market reaction to this memorandum?
Yeah, I think this it just piles on to some of the negative sentiment surrounding China right now. And, there's a lot of factors at work. Markets were very excited about China back last fall when there were these announcements of stimulus underway. Markets sort of became disappointed when a lot of those stimulus plans didn't pan out or weren't as aggressive as people were hoping for. But, basically for most of the last decade, there's been a steady drumbeat of U.S. China tensions, and that is not good for the Chinese markets. And I think this is just sort of an upping of that overlying threat that the U.S. will take actions that will either significantly disrupt the ability of Chinese companies to invest in the U.S. or for U.S. investors to invest in China.
Yeah. The tax treaty, what would be the implications if the tax treaty were terminated?
Yeah, tax treaties are quite important in terms of ensuring that there's not double taxation. So if I'm investing in China or a Chinese investor is investing in the US, you don't want to pay taxes to the US government and the Chinese government. That could become, prohibitive for any given investment. And so tax treaties work to essentially make sure that if you're paying taxes to one government, you get credit for it with the other government, and that reduces your overall liability. So this was one of the newer things in this memorandum, and I think one of the more potentially disruptive things of if the U.S. suspends or alters that tax treaty, that will change the calculation of a lot of not only investors but businesses that are operating in China or Chinese businesses that are operating in the U.S. It's very hard to make plans, to make investments, to do long-term strategy if you don't know what your tax rates are going to be. And so it's, I think, a very potentially powerful and disruptive tool to disincentivize cross-border economic relations if you start messing with the tax treaty.
I assume the companies suffering the worst consequences would be Tesla and Apple.
Could be very potentially disruptive in a sense of.
I assume they're taxpayers in China, but maybe not. I don't know where they allocate those profits.
Yeah, there's still many U.S. companies that have large operations in China, whether it's through sales or assembly. The U.S. China economic relationship is still quite central to both countries. And so if you are suddenly changing the taxes associated with that in a very disruptive and damaging way, that could have huge implications for a lot of different companies.
Last question, just step back. How does this fit into kind of the overall economic policy towards China of our new government?
Yeah, I think, we're, as I mentioned before, we're still trying to figure out where that policy is ultimately going to shake out. Whether it's going to go in a more hawkish mode or actually try to seek some sort of accommodation. But I do think there is now very much an increased focus on capital flows and their strategic importance, both in terms of financing companies, but also a lot of what the memorandum gets into is, the diffusion of ideas and technology between the two countries. And so economic policy, and especially sort of economic sanctions and sanctions as a tool of foreign policy, that is getting much more sophisticated, much more complex, and potentially much more disruptive than it ever has been in the past. And so I think we've sort of entered a new phase for U.S. foreign policy where, there's this view of U.S. capital markets being one of our key national strengths, and how can we leverage those capital markets to push forward our foreign policy agenda. And for me, it's hard to see any administration, whether the current one or the future, will give up that tool because it is potentially so powerful.
Yeah. Nick, thank you so much. You have clarified what has been a certainly some confusion on my part in terms of what the memorandum does. And you have done precisely what we want our public intellectuals to do, which is educate the public, use your expertise and go and talk to a large group. But thank you so much for joining us today.
Thank you, Steve. I really enjoyed the discussion.